On October 6, 2025, the world was rocked by a financial earthquake. Its epicenter, New Delhi, India, announced a bold plan to systematically reduce its dependence on the US dollar, sending shockwaves through global markets. This wasn't a minor policy tweak, it was a declaration of economic independence. The global financial system, long anchored by the dollar, suddenly looked fragile. For decades, the US dollar has been the lifeblood of global trade and finance. India's move challenges this entire framework, signaling a loss of faith in America's leadership. Prime Minister Modi, once a regular at the White House, is now steering India toward a new Asian-centric order, with China as a surprising partner. This is India, a nation of 1.4 billion, the world's fastest-growing major economy, and a rising military power, making a calculated bet against the American-led system. The question is no longer if the global system will change, but how fast, and what will replace it. The world is watching, holding its breath. This is a geopolitical realignment of historic proportions. India's move forces every nation to reassess, stick with the familiar American system or follow India into a new, uncertain future. The financial earthquake that began in New Delhi is just the beginning. The aftershocks will reshape alliances, rivalries, and the global landscape for decades. The world order we know is being rewritten. India has thrown down the gauntlet. The age of dollar supremacy is under threat. India's pivot is visible in the numbers. Over the past 18 months, the Reserve Bank of India has quietly sold off tens of billions in US Treasury bonds. Once considered the safest asset, American debt is now seen as risky in New Delhi. The RBI has redirected this capital into two places: gold and Chinese yuan. India is now one of the world's largest sovereign buyers of gold, insulating its wealth from US policy and political turmoil. At the same time, India is accumulating Chinese yuan for the first time ever. This move directly challenges the dollar's dominance and facilitates trade with China, bypassing the dollar-based SWIFT system. It's a pragmatic decision, reducing vulnerability to US sanctions and transaction costs. India is building a financial fortress with gold while opening a new gate to the east. This diversification is more than a financial tactic, it's a declaration of independence. India is no longer keeping all its eggs in the American basket. The message is clear: a new assertive Indian foreign policy is here. The world is taking notice. India's dramatic pivot has roots in years of escalating trade tensions, with the US tariffs on Indian goods, once seen as partnership, became a symbol of betrayal. Modi's initial restraint gave way to a strategic reassessment as US demands grew harsher. The belief in America as a reliable partner eroded. Indian policymakers saw the dollar-centric system as a potential weapon against them. Thus was born the Modi Doctrine: strategic autonomy, reduced dependency, and a multipolar vision. The final straw came, with new tariffs targeting India's tech sector, an affront to its ambitions. For Modi, the risks of dependence now outweighed the risks of a bold break. The Modi Doctrine became a national imperative. India would no longer be a balancing power in a US-led system, but a leading power in a multipolar world. The financial earthquake was set in motion. As US ties frayed, China seized the moment with a calculated charm offensive. President Xi Jinping offered India a partnership, mutual prosperity, shared Asian destiny, and a seat at the table. China invited India to co-develop Belt and Road projects, offering unprecedented concessions and joint control. Infrastructure, technology, and capital flowed as incentives. China proposed a new digital currency payment system for bilateral trade, bypassing the dollar and SWIFT. Chinese bond markets opened to Indian investors, and state-owned enterprises pledged to invest in India's manufacturing and tech sectors. For India, the appeal was clear capital, technology, and a chance to co-author the rules of the Asian century. Mistrust lingered, but the benefits outweighed the risks, especially compared to US unpredictability. The dragon's embrace, once a threat, became an opportunity. India made a pragmatic calculation. The world's balance of power was shifting. News from New Delhi hit Washington like a thunderclap. US officials were stunned. India, the linchpin of America's Asia strategy, was pivoting toward Beijing. Initial denial gave way to panic as India's financial maneuvers became clear. India's sell-off of US debt threatened to spike American borrowing costs and destabilize the dollar. Emergency meetings erupted at the Federal Reserve and White House. President Trump's furious tweets and threats of tariffs only deepened the crisis, confirming India's fears of US unpredictability. Diplomacy faltered. The post-Cold War security architecture in Asia was unraveling. America's coalition to contain China was in tatters. Strategic bankruptcy set in. The policies of the past decade had culminated in a geopolitical disaster. Washington's reckoning had arrived. The world order was shifting beneath America's feet. India's move sent a powerful signal to the global south. Dozens of nations are now questioning their reliance on the US dollar. The first domino to watch: Saudi Arabia, where the petrodollar system is already under strain. The BRICS bloc is rallying behind India, accelerating plans for a shared payment system and reserve currency. Middle-tier nations, Turkey, Indonesia, Nigeria, Argentina, are watching closely. India's pivot provides a blueprint and political cover for others to diversify away from the dollar. Expect a wave of central banks increasing gold, yuan, and euro holdings. The dollar's strength relies on everyone using it. If enough opt out, the network unravels. India may have pushed the first and largest domino. The chain reaction may not be immediate, but it could be unstoppable. The global financial system is on the verge of fundamental change. Europe faces a profound dilemma. As US allies, European nations are alarmed by the instability India's move brings to the dollar-based system. Yet, leaders like Macron see vindication for their calls for European strategic autonomy. The world is becoming more multipolar, and clinging to an American-centric order looks less viable. Economically, a weaker dollar could boost the euro's role, but global chaos is a bigger threat. European central bankers walk a tightrope, seeking stability while eyeing opportunities for the euro. Diplomatically, Europe is scrambling, reaching out to New Delhi, Beijing, and Washington to adapt to the new landscape. The old Cold War calculus is gone. Europe must now navigate a world with multiple centers of power. India's decision forces Europe to confront its own future. Will it remain a junior partner to a declining America, or forge its own path? The continent stands at a crossroads. The New World Order demands new choices. India's break from the dollar is more than a headline, it's a turning point in history. The post-Bretton Woods order, with the dollar as its symbol, is fading. India's move exposes the fragility of that system and accelerates the shift to a decentralized, multipolar world. The future will be uncertain and competitive, with multiple reserve currencies, yuan, euro, gold, jostling for influence. Trade will become more complex, alliances more fluid. This isn't chaos, but a return to a world of many powers and currencies. Strategic autonomy will be the new global mantra. India hasn't destroyed the old order but revealed its cracks. Economic power is shifting eastward. The political consensus behind US leadership is fractured. India's decision is the most dramatic symptom of this change. We are at the dawn of a new era. The world of 2025 is no longer bound by the assumptions of the past. A multipolar order is being born, and India is now a shaper of its destiny.